Good morning. You're watching Market Cafe with me, Shreyanshi Singh, and my co-anchor Snehi Shah. And over the next 1 hour, we'll take you through news and updates from within the country, as well as across the globe. We'll tell you which stocks you should keep on your radar, what the brokerages are saying, and a lot more. So, Snehi, to begin with, what is the international handover looking like?
Well, Shreyanshi, good day in trade for us. Yesterday, we managed to reverse all losses, ending at a good level, and similarly can be said for the global handover as well. US, a very sharp recovery seen coming in on Wall Street compared to day before yesterday's moves. Now, stock futures were flat on Wednesday evening as Wall Street looked to build on a modest rebound with key economic data on deck. Stocks rallied on Wednesday on an intraday session but did not erase all of the losses from Tuesday's sell-off, which is understandably so because those losses were also quite steep. Now, those losses came on the heels of a hotter than expected inflation report as well. But what's also key to note and a positive factor coming in is that the S&P 500 recaptured that 5,000 level, closing slightly above it. Investors are weighing whether the Fed Reserve can bring down inflation without derailing an economy that keeps surprising but on the upside, so that's a good thing. And investors will get another update about the state of the US economy on Thursday, with January retail sales and weekly unemployment claims data due out before the opening bell on Wall Street. Let's talk about earnings season because that continues to paint a muddled picture of corporate America now. Cisco shares were down 5% in extended trading after the tech company announced layoffs and weak forward sales projections as well. TripAdvisor jumped 7% after beating estimates on the top and bottom lines as well. Fast food company Shake Shack is scheduled to report earnings before the bell today morning. But when we look at it on an overall basis, then you had the Dow Jones up almost 0.5%, a 150-point recovery coming over there. S&P 500, 1% uptick coming over there. And Nasdaq, also one of the true winners in the market yesterday, a 1.3% uptick coming in on Nasdaq as well. So, well, rather strong handover coming in from the US. But when I'm shifting focus to the European markets, once again all I'm seeing is green on the screen, so that's a positive indicator this morning as well. DAX up 0.4%, FTSE also up 0.7%, strong moves coming there. CSE 40 up 0.7%, and the overall stock 600 also holding the steady gains of more than 0.5% uptick. So, well, Shreyanshi, looking rather positive for us this morning, implied open in the green as well. So, well, let's see how that pans out for us this morning.
Absolutely, and when you look at oil as well, some solid moves coming in there as well. When you look at crude oil futures, of course, they fell on Wednesday, giving up gains from earlier in the session as stockpiles surged in the US, while demand fell. So when you look at the WTI contract, that lost about 1.5% to settle around that $76 a barrel mark. And when you look at Brent as well, that also lost 1.4%, settle around that $81 a barrel mark. Now, the move came after commercial crude oil inventories in the US surged by 12 million barrels last week, according to the EIA, and oil demand as measured by finished products supplied to the market dropped by 973,000 barrels per day during the same period. Now, oil prices had gained 1% earlier in the trading session, and this was after Israel launched airstrikes in Lebanon in reaction to rockets fired into northern Israel that killed one person and injured at least 7 more. Now, CIA Director William Burns is in Cairo to facilitate negotiations involving Israel, Hamas, Qatar, as well as Egypt, aimed at securing a truce in the fighting in exchange for Hamas releasing hostages. Now, crude oil futures, mind you, have repeatedly advanced in recent months on tensions in the Middle East, only to give up those gains on worries that there is too much supply in the market as demand falls. So that's largely what you're seeing playing out in the oil market broadly. But looking at gold then, gold prices extended their dip and traded below the key 2,000 per ounce level. And this was a day after hotter than expected US inflation data that we told you about yesterday. And this prompted investors to lower bets for early Federal Reserve interest rate cuts, while palladium jumped over 7%. Now, when you look at Bitcoin as well, Bitcoin surged to another more than 2-year high. And this was after pushing its market cap back over $1 trillion. And this was as growing success of US spot Bitcoin ETFs returned investor sentiment a little more positive. So some positive news coming in for Bitcoin as well.
Well, all right, with that, let's take a look at all the important events that you need to be watching out for in today's trading session. When we look at some global cues coming in, like we mentioned earlier, from the US, you've got a whole host of data like initial jobless claims, industrial production, as well as retail sales fundamentals coming out. From the UK also, then you have industrial production, GDP, as well as trade balance data coming out today. Lots of important macroeconomic indicators in these numbers, so watch out for these numbers as well. Shifting focus back home, let's talk about the primary markets because today is the last day to subscribe for the Vibhor Steel Tubes IPO. That will be closing today for subscription, so watch out for that one as well. And today is the last day to be eligible to buy a whole host of stocks for their dividend, the likes of Uno Minda, CCL Products, Man Infra, Nestle and Power Grid as well. Let's talk about some corporate action then, and the stock to watch today will be KPI Green Energy, because that stock will be trading ex-bonus today. That bonus issue that they had announced will be executed today in the ratio of 1:2. So those shares will be trading ex-bonus. So we'll be watching out for that counter in trade as well. When we take a look at other events, then you've got the NATO defense ministers meeting happening in Brussels. You've got the Fed's Bolstick. He's also going to be speaking at an event, and ECB's Philip Lane will also be speaking at an online seminar. So key commentary also coming out from there. We'll be watching for any commentary on how the countries and how these places manage to tackle their macroeconomic situations going ahead. The Global Pulse Convention, which is a 3-day meeting in Delhi, that will be beginning today. The Allahabad High Court will also resume hearing the Gyan Vapi trial. So, well, lots of cues to watch out for in today's trading session in the market and outside of it as well, Shayansi. Interesting day for us.
Absolutely, definitely. And after the hotter than expected headline inflation print from US Treasury Secretary Janet Yellen said that the recent macro data was only a tad bit higher than expectations. In the long run, Americans should focus on long-term declines in inflationary trends, she added. And she also believes that it is a mistake to be focusing on minor fluctuations and that the trend is that inflation is moving decisively down.
Alright, let's stay with macros, but let's center focus on Asia, where the Japanese economy has unexpectedly contracted in the October to December period as high inflation crippled demand, and consumption is what is now the world's fourth largest economy. A second straight quarter-on-quarter GDP decline also means Japan has dipped into a technical recession. On the flip side, Singapore's economy grew 2.2% on a year-on-year basis in Q4, albeit falling short of estimates nonetheless. The reading, however, marks a sharp increase from the 1% growth in the previous quarter. When we mark the Asian markets in a bit, we'll tell you how these numbers have impacted the respective stock markets as well.
And from macros to equities then, Cisco announced that it would lay off 5% of its global workforce, which amounts to 4,000 jobs. Alongside, the company also lowered its annual revenue target as they struggle to navigate a jittery economy. Important to note that the announcement comes amid a slew of other global tech majors announcing job cuts this year. In a reaction, shares of the networking equipment fell more than 5% in after-hours trade.
Alright, and global investment banking giant Morgan Stanley too is reportedly looking to reduce workforce in its wealth management unit. The said decision is part of a larger trend among Wall Street firms who have been implementing layoffs since last year. The cuts, expected to affect less than 1% of the division's employees, come amid ongoing economic uncertainties and concerns about the direction of interest rate cuts by the Federal Reserve.
And overnight, we did see a recovery trend across asset classes, and cryptos were not far behind. Like I mentioned, it wasn't just US equities that were seen regaining momentum. World's largest cryptocurrency, Bitcoin, recaptured that $1 trillion market cap as it scaled 2-year highs, breaking past new high of $52,000.
Well, and PM Modi has inaugurated the Baps Temple in Abu Dhabi, the first ever stone Hindu temple in the city. The temple includes facilities like a prayer room, amphitheatre and spacious gardens. The land was donated by the Crown Prince back in 2015, and the inauguration is celebrated as a festival of harmony with community events and service focusing on strengthening faith. Times Network's Srinjoy Chaudhary joins in with more details. Srinjoy, tell us more about this inauguration.
Well, first of all, it is a clear sign that India and the Gulf countries have a lot in common. A sign that the economic relationship stabilized into a political relationship. Yes, we buy lots of oil from the Gulf. We buy a lot of gas from the Gulf. And as a result, there are a lot of people who are working there, a lot of Indians who are working there. Now that was the economic relationship. On that was built the political edifice. The fact that there is the I2U2, the fact that there is the IMEC, the fact that India and the UAE have very strong defense ties, all of that is already there. And to add to that, you have another story in this house, that is the relationship between India and the Gulf. And that is the socio-cultural relationship. And the temple is a sign that the socio-cultural relationship between India and the Gulf is up and running.
Well, thanks, Ranjoy. Time for a quick break then. When we return, we'll take you through how the Asian markets are faring.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. You're still watching ET now. Let's get you some news coming in from the RBI, because RBI Governor Shakti Das held a meeting with the MDs and CEOs of the public and private sector banks, where they highlighted the issues like outlier growth in personal loans and adherence to co-lending guidelines highlighted. Ankur Mishra is joining us with more details on that. Ankur, take it away.
Yes, an important meeting was held between Reserve Bank of India Governor and bankers. The bankers who were present were related to public sector banks as well as select private bank chiefs. The discussion was related to outlier growth in personal loans, adherence to co-lending guidelines. The issues which were discussed also included banks' exposure to NBFC sector, liquidity risk management, IT and cyber security, among others. RBI Governor was very clear that issues related to operational resilience, digital frauds and strengthening of internal rating framework should be done by the banks. In fact, a clear message was given by the Governor to banks, and he said that there is no scope of any complacency which banks should go through, and they should continue to maintain their vigil around build up of risk if they monitor anything. There was also a message which was given regarding the customer protection and customer grievance redress mechanism, and protection of customers' interests are of paramount importance for banks, and Governor remained very clear to banks in the meeting which was held on Wednesday.
Well, thanks, Ankur, for those details. But NSE will be conducting a special live trading session on March 2nd with intraday switchover to DR sites. So take us through what the trading day is going to look like.
Yes, exchanges will conduct a special session on 2nd of March to test the disaster recovery site. Remember, earlier also this kind of announcement was made by the exchanges. However, there was a special trading day which needed to be organized because of the holiday due to Ram Janmabhoomi inauguration, and now finally that plan is getting executed, and upon which the trading members will be able to execute the orders on a Saturday. Yes, you heard it right. It is going to be a working Saturday on 2nd of March where live trading session will happen to test the disaster recovery site. Now, why this testing is important? Because as per mandate of the regulator, that site needs to be tested in the event of any disaster or mishap, so that exchanges can shift to that site in the event as and when it is required. So that special trading session is now going to be conducted on 2nd of March.
Well, thanks, Ankur, for taking us through that. Well, Shreyansi, that just means another working Saturday for us. But let's get a move on then, and here is an ET Now exclusive. Vedanta is in talks with GQG for a potential stake sale, and Ajay Sharma, who broke the story, is on the phone line with more details. Ajay, what are you picking up? Break down the story for us, please.
Well, that's correct. This is going to be a big one. The renowned investor Rajiv Jain, GQG partners, we understand, have had multiple conversations with Vedanta. And Vedanta is very close to selling about $1 billion worth of share to GQG. Very shortly, this is likely to happen by way of block deals. And the idea is that Vedanta, which is at the parent level right now, is facing some stresses due to almost $3.5-4 billion worth of debt. They have recently restructured some of it, repriced it, but still that needs to be serviced. And so this time they'll go for a share sale via block deal, where promoters will sell stake, and this will bring down their debt by almost a third. What is interesting is the message to the market would be very clear that the promoter is very serious about reduction of debt, and is not into a situation where they are in a very tight spot. They have the levers by selling stake, etc. So this is what we understand is likely to happen. We spoke to the management, but they did not respond to our queries. In fact, they said that we will not, reply on any market speculation. But we understand that multiple conversations have happened, and very lately a final deal has been discussed, and this could happen very shortly via block deals.
All right. Right. Thank you so much, Ajay, for those details. We'll take you through the updates coming in on this particular topic later through the rest of the day as well. But moving on then, Ronnie Screwvala convened a meeting of EdTech founders in Gurugram in order to address challenges in the EdTech industry. Founders and teams of 12 to 15 EdTech companies attended the meeting. Sumita Karir is here with the details.
Serial entrepreneur and investor Ronnie Screwvala convened a meeting of EdTech founders, EdTech companies today in Gurgaon. This meeting was convened to address challenges that the EdTech sector is facing, particularly in the aftermath of Byju's and what's really been happening with Byju's, and to, of course, foster a collaborative dialogue for the road ahead for the EdTech ecosystem. So around 12 to 15 companies were present at this closed-door meeting. In fact, the founders in a huddle discussed a couple of things. Number one, that investors are cautious. That was one theme that really held strong as far as that meeting is concerned, and that the Byju's debacle has really impacted the overall EdTech ecosystem. But one company's performance, one company's failure should not really affect the overall ecosystem, because there are lots of good things that are also happening. So what the grouping has really suggested, what the grouping really discussed in that meeting is that focus should be on a key couple of areas. Number one, to promote special impact learning as part of EdTech. In fact, they should be, they should be working on areas that are related to the national education policy, and they should align themselves and EdTech ecosystem with the broader national vision for education. They should also be looking at building credibility as far as the ecosystem is concerned, and hence high impact work needs to be well positioned. The credibility as far as the EdTech ecosystem is concerned needs to be built. And for that, a working committee, we are told by our sources, will be formed to work on these areas. So Ronnie Screwvala has been a vocal critic of how Byju's has been handled, and he had, in a post on X, expressed support for the decision of Byju's major shareholders to remove the current management and rejig the board. But overall, what really are the steps that are taken by this grouping, this informal grouping, will be interesting to see, and whether they are able to really turn the fortunes of India's EdTech ecosystem.
All right, Sumita, thanks so much for taking us through that. But while you're with us, stay tuned and let's talk about Paytm, because that stock was once again in lower circuit yesterday, down 10%. Now, Paytm has confirmed receiving notices from authorities, including the ED, which is the Enforcement Directorate. Now, Paytm subsidiary and associate company, the Paytm Payments Bank, they've been receiving notices and requisition for information. Paytm says that information, documents and explanations have been provided to the authorities. So, Sumita, fill us in and get us up to speed with what's happening at Paytm and what's the latest now that is spooking this company?
So in an exchange filing just a short while back, Paytm did confirm receiving notices from authorities, including the Enforcement Directorate. And in fact, earlier in the day, ET now reported that ED was conducting a preliminary investigation. That's, remember, something that we reported earlier in the day. So in the exchange filing, Paytm says that Paytm and its associate, Paytm Payments Bank Limited, have over time been receiving notices and requisition for information, documents and explanations from the authorities, including the ED, with respect to, of course, customers that may have done business with its respective entities. So they are saying that they have, of course, this is a normal routine matter, and they've been receiving notices and they've provided information. However, the company also says that that Paytm Payments Bank Limited does not really undertake outward foreign remittance, because that's also been a charge. It also says that we've always made and will continue to make our disclosures with our obligations with SEBI. Remember, the investigation agency had first sought more information from RBI before actually launching in the preliminary investigation, after RBI's decision, rather a directive to to sort of wind down, to Paytm to wind down its business by February 29. So that's the update. That's the latest that we have from Paytm. This is an exchange filing wherein Paytm is confirming receiving notices from ED.
All right, thanks Sumita for those details. Moving over to earnings then, it was a weak show for GSPL for the quarter gone by. The profits have dipped by 50% on a quarter-on-quarter basis. Volumes have also seen a downtick. So Somit is here to take us through the earnings fine print. Somit?
Well, for Gujarat State Petroleum, if you see the third quarter was a weak set of numbers. Revenues were down around 5% on a sequential basis. EBITDA was lower by around 7.5%. Net profit declined much higher at around 51%, but that is because in the previous quarter, that is in the second quarter, there was some other income due to higher dividend income coming in, and hence we are seeing such a sharper drop. But overall, it was a weak set of numbers. But the biggest surprise that the street has seen is that the volume number for the company was 4% low on a sequential basis at around 29 MMSCMD. Now, why this has come as a surprise, because overall if you see in the third quarter, India's gas consumption had increased. GAIL also had seen an increase in transmission volume in the third quarter of FY24, and in light of that, GSPL has actually come in with a volume decline of around 4% on a sequential basis. Now what we understand is this volume have moderated in the third quarter because of lower offtake coming in from the power sector, and that's what has hurt the company in the third quarter. And apart from that, the EBITDA number was lower because of higher cost. If you see the higher compressor usage led to a 49% jump in other expenses to around 39 crore rupees, and that's one of the main reason why the company's EBITDA has also come in 7.5% lower. Now apart from this, the key overhang on the company continues to remain, and that was one of the main reason why Citi had yesterday downgraded its rating on GSPL to sell from a buy, and they're saying that the lack of final regulatory clarity when it comes to tariff continues to remain a key overhang, and it has been dragged for longer than anticipated, and none of the brokerages, even Kotak is not expecting any much upside from GSPL until and unless there's some clarity on the tariffs that needs to come in from PNGRB. So keep an eye out for GSPL in trade.
All right, Samir, weak quarter coming in for GSPL. We'll be watching out how that stock gets impacted on the back of its numbers. But another company and an auto major that came out with its numbers yesterday is Scorpio maker M&M, and that saw a rise of 4% in its third quarter revenue. But on a sequential basis, the net profit declined almost 29%, when on an otherwise the decline was expected only to come in at 23% for their PAT. And this is of course compared to the previous quarter, so this is a sequential move. The automaker saw an increase in its tractor and LCV market share as well. So Winnie is joining us with a breakdown of all these numbers and what brokerages also have to say on this going ahead. Winnie, good morning. Take it away.
So obviously, in terms of numbers that have come in, seems like a decent set of numbers that has come in from M&M. It was reported during market hours yesterday, but today when you're looking at the brokerage notes, they're maintaining a hold on M&M, given a hike to the target price. This is Jefferies. They've hiked the target price to 1,615 rupees from previous target price of 1,580 rupees per share. They're saying overall Q3 was quite good. The downturn in tractors business, that's something that's still a concern, because seems like that's intensifying a bit. Now overall tractor slowdown is especially intensifying after the elongated upcycle that it saw. The order book actually has come off sharply in the last 3 months. Although new order inflow is holding up well, is the highlight that is coming in from Jefferies. What they're highlighting is that the stock is not cheap, unlikely to deliver meaningful returns until tractor demand visibility actually starts improving. That's a word from Jefferies. Now Morgan Stanley is maintaining an overweight. They too have actually hiked the target price to 1,952 rupees per share from previous 1,859 rupees per share. They're saying that the auto business momentum is continuing. Management is targeting a mid-high teens growth in its UVs in FY25. So yeah, that's the word that's coming in. And tractor business, that's something that they are keeping an eye out on as well. Lastly, Nomura maintain a buy, hike the target price as well. 2,143 rupees is the new target price they've given. Overall, quite optimistic in terms of the structural growth for M&M in SUVs in India, as well as they believe M&M's SUV and EV model is strong, and the order book of 5 to 6 months gives them some visibility on that front as well. It's their top pick in the auto sector as well, and they are expecting an EBITDA growth of 17% in FY25 and a CAGR EBITDA growth of 16% over the next couple of years as well. So that's the word coming in from analysts in terms of brokerages on M&M. But let's go across and listen into what the management had to say in terms of their outlook going forward as well. Rajesh Jittery on the con call.
Open bookings now are at 226,000. We continue to get strong new bookings at 50,000 per month. The billing rate has gone up clearly, so that helps bring down the waiting period and also the open books, which is something we were all hoping to get going with our brands, and you can see the reflection of the improved capacity delivery out there. We had said we'll exit this quarter at 49,000 capacity. We are on track to achieve that. We expect the next few months to be flattish from a current volume standpoint. SIAM projection right now for the industry is 10% for UVs, 3 to 4% for passenger vehicles. And we are giving a kind of directional input. I wouldn't call it guidance, but a directional input that we would expect to continue gain market share and would be in the mid to high teens.
All right, well, that's the view coming in from Rajesh Jujurikar of M&M. But let's also go across to Winnie yet again to find out which other stocks are brokerages keeping on their radar and what are the key takeaways of these notes.
So absolutely, let's start with Oil India. There's a brokerage note that's coming from Morgan Stanley. They're maintaining an overweight rating and a target price of 487 rupees per share. What they're saying that Oil India is growing well. They have a bullish guidance on Oil India. No interim dividend was a negative surprise, but all in all, Oil India's hydrocarbon growth as well as refining operations reported a good set of numbers on that front in terms of the global contracts as well. So that's something that stood out for them for Oil India. Let's move on, talk about Crompton Greaves Consumer Electricals. Morgan Stanley is maintaining an equal weight rating, target price of 281 rupees after the company reported its Q3 numbers. Margin led a bit of a miss on that front. Top line was overall in line with the estimates of Morgan Stanley. So margins was something that missed it because the ECD and the butterfly led to a miss in terms of the overall margins of the company. So maybe keeping an eye out on Crompton Greaves Consumer Electricals after its numbers, and Morgan Stanley seeing a bit of a miss on the margin front. Lastly, Muthoot Finance, we're keeping an eye out on that because Morgan Stanley is maintaining an underweight rating, a target price of 1,165 rupees per share. What they're saying is for Muthoot Finance, overall the PPOP growth was in line. Credit cost is something that led to the beat of the profits of the company. AUM growth was in line. Loan growth, gold loan growth grew by around 2.5% on a quarter-on-quarter basis. And even the gross stage 2 and 3 ratios have improved as well. So on the back of that, they're keeping an eye out on Muthoot Finance as well. This is what the brokerage radar is looking like this morning.
All right, Vinny, thanks so much for taking us through that. We'll be watching out for all of these stocks in today's trading session on the back of all of these notes coming in from brokerage houses this morning. But with that, we'll slip into a very short break. More stock-specific news and updates when we return.
Welcome back. Still tuned into Market Cafe on ET Now. Let's move the spotlight to earnings then, and a strong set of numbers coming in from NMDC. The company has declared an interim dividend of rupees 5.75 per share. Ashesha is standing by with the earnings fine print. Ashesha, take it away.
Well, yes, very strong numbers from NMDC, especially on the profitability front. Higher volumes, higher realizations and lower than expected costs aided numbers for NMDC this time around. Revenues have come in largely in line with what the street was working with and a growth of about 35% on a sequential basis. But margins have expanded a whole lot this quarter. Company has reported margins at 37% versus 29% that the company had reported in the second quarter. As far as other internals are concerned, as I mentioned, higher volume growth aided numbers for the company this time. So volumes rose by about 19% on a sequential basis. Realizations also picked up sequentially on account of price hikes that the company had undertaken during the quarter. In fact, fourth quarter is expected to be even stronger because of continued price hikes in the fourth quarter as well. Yes, company has also declared interim dividend of 5.25 rupees per share. So all in all, very strong set of numbers. Volumes were on the higher side. EBITDA per ton and realizations also inched up higher, which aided numbers for the company.
All right, Ashesha, thanks for taking us through that. NMDC will be in focus on the back of that news flow as well. But IRDAI has released draft regulations for the electronic insurance marketplace Bima Sugam. This is an update we received yesterday. And we have a handful of brokerage notes on the matter as well that have come out this morning. So Sharad is here with the details on all of these notes. Sharad, good morning. Break down these notes for us.
Well, importantly, if you look at Bima Sugam, it's expected to be a pull kind of a platform coming in, and of course the main USP as per Macquarie would be the lower commissions. Now of course a mixed kind of a views coming in from all the brokerages when it comes to PB FinTech, because that's the exact direct play which we are talking about here. And of course Macquarie has stated that this could be a potential negative rub-off effect might be there, at least on the long-term prospects when it comes to PB FinTech. Also Investec has also stated in its report that the Bima Sugam insurance sales process would actually go for simplifying the entire process, and also they expect that this wouldn't be such a big threat when it comes to PB FinTech going ahead or any other insurance companies at this point. It's at a very nascent stage. But importantly, they have stated that this might be something called as a UPI moment for insurance sector. We have also heard about some analysts talking about the 401k movement, what we saw in mutual funds, which we might see in this Bima Sugam concept. Also, Morgan Stanley also came out with this report, and over here there has been divergent views from other broking houses, and they have stated that there has been no mention of discounting pricing models yet. And importantly, there is no difference coming in from the distribution channels and of the current channel as well. So it will be very important and a very developing story when it comes to the Bima Sugam concept.
Alright, Sharad, thanks so much for taking us through that. But let's talk about the moves that we saw in SBI, because the largest bank in the country, SBI, has been on a tear. It gained 4% alone just yesterday, and over the past 1 month, it is up 16% as well. What's driving this rally when the second largest bank, HDFC, is continuously under pressure? Then that's a paradox, and that's a phenomena we're trying to understand. So why is SBI buzzing? Are fundamentals supporting this? Let's take a look and understand. Now, while results for the bank were in line, investors are being more favorable towards the PSU pack lately, as valuations for PSUs was at a discount to private banks due to growth and asset quality concerns. Now for SBI, things have changed. Asset quality is improving, growth perspectives are more clearer, and SBI is leading the pack despite having the highest base for the loan book. But if you still ask why is SBI preferred, it's a fair question. Let's understand. Now SBI is in the green when it comes to almost all the key parameters for 9 months FY24. The loan book growth has been amongst the best. NIMs are amongst the best. NPA ratios also among the best. Credit deposit ratio still at 75.26, leaving a lot of headroom for growth, which will also aid NIMs on the back of the low cost of funds as well. When we look at all of these metrics individually, let's take a look at the advances, because that is at 35.8 lakh crore rupees, followed second only by Bank of Baroda, just at 10.5 lakh crore rupees. So also that's a big gap that SBI has when it comes to advances compared to other banks. On a year-on-year basis, advances has grown the most compared to other PSUs at 14.3%. NIMs are at the highest at 3.28%. GNPA and NNPA at the lowest when you compare it with other PSUs, which means asset quality is among the best in the business as well. The CD ratio at 75.26%, like I mentioned earlier, also depicting a lot of headroom for internal growth. So, well, largely this is why SBI is doing well when it comes to intraday moves. On the other hand, when HDFC continues to be under pressure.
Alright, well, with this, we're timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together. Thank you so much for watching. Don't go anywhere, because the market takes the action forward.